Hey everyone, how you doing today? Topic number 3 with Matt. We're going to jump in the time machine because I think something is about to happen that happened to Matt and I 20 years ago. How you doing, buddy?
I'm doing awesome, Mike. And it's so, doesn't it look the same?
It
Like,
does.
doesn't everything feel the same?
Yeah. I mean, when I put on my rear view mirror glasses and I look back and remember the excitement I felt that ultimately turned into despair, we're set up. There's going to be a lot of people hurt. Hopefully this conversation causes people to take off some of the leverage and margin. But let's go back to the year 2000 or thereabouts. We're both in tech.
Yep.
We're both kind of in it. We see the .coms, the pet.coms, the Excite, all these, remember Ask Jeeves and, all of these things just going bananas. You couldn't do anything wrong. There was a time where you could bet on any stock that had a .com in the name and you would make 10%, 20% a month. Remember that time?
Yeah. I mean, one of my favorite deals I ever closed in tech was rooster.com. I swear to you. Rooster.com. I swear to you. Real deal. Actually did a deal with them. Rooster.com.
I don't remember this one. I have one that's just hilarious. I wish I remembered the name. Remember when everybody was doing marketplaces? There was a company that got like $5 million of funding, or maybe it was 50 million. I don't know. But we went to their office because I was a pre-sales. I wasn't even sales yet. I wasn't the sales rep. I was the smart guy, the tech guy. And I go into, and we had projectors. Remember when projectors were like luggables? Yeah. They weren't like portable. Yeah. They were like this big and weighed 40 pounds.
Yeah, I do.
So I'm pulling my, case. I'm all fancy and stuff. And I go in, I said, where should I plug in? Right. Cause I want to give you my presentation on my laptop and my projector. Oh, right over there. I'm like, on the ping pong table? They're like, yeah, on the ping pong table. I'm like, yes. Okay, well, all right. Well, the ping pong table's next to the foosball table, and it was just bananas. Anyways, we do a 5-minute discussion. They buy $250,000 worth of stuff, and they're out of business in 90 days. They never even implement the product. I mean, that was just crazy times. Anyways, I digress. The reason we're bringing this up is because when the market rises, all ships go up.
That's right.
But there will be some event, and I'm very fearful of this happening in the next 90 days or less, where the market gets the chair kicked out from under them. And if you're on margin or in the market options or heavily leveraged, you really can get wiped out very quickly. I mean, just see a couple of hedge funds here recently that were on the wrong side of the trade, both a short and a long position, wiped out with margin calls, right? So if you're flying really high on the hog today, be careful is my warning, because you're not Warren Buffett. You can't predict the future, and the market can bite you.
I mean, it's all right, Mike. I mean, I'm safe. I'm in Tesla, and Tesla only goes up. So
Tesla only goes up. Yeah.
But Mike, this was our experience with Cisco, right?
It was.
Like, that's all Cisco did. Up, split, up, split, up, split. And, let's face it, Tesla's done a lot of the same things. And I get it. I understand the comments. They're not just a car company. Yeah, I get it. And I get that Elon Musk is brilliant. But let me talk to you about a little thing called multiple. And it would be word of the day if confiscatory already wasn't. But that multiple gets insane.
Yeah.
And you look at that multiple and it's like, I'm watching CNBC this morning. That's part of my morning just because I have it on and I'm listening to the, all the labor statistics and things like that. Cause that's, a lot of that drives housing and jobs.
Mm-hmm. Exactly.
Number one, they're talking about maybe the first month of over 1 million new jobs next month. Yeah. That's what they're talking about. And then on top of that, they're talking about the fact that, multiples are around 18, 19. Hey, Mike, quick quiz. When was the last time multiples were around 18 and 19 in largely the tech sector?
Oh, that
just
would be
wondering.
Just a 2000 period, somewhere around there.
That sounds right to me for some reason.
How about companies with 100 times revenue? Usually companies are evaluated on profit.
Exactly.
The bottom line.
Yeah, exactly.
Now we're valuing companies on top line. You know how that ended last time?
Yeah. Yeah. We had a fun skit that we actually did in my office when you would just turn on CNBC and all they were talking about was, revenues, and never anything about margin or expense or bottom line. Everything was revenues. And we were joking about that. I was like, you don't seem to understand. We brought in $1 billion. Great. How much did it cost you? Oh, we don't answer that question. Because they spent $2.5 billion to get the $1 billion in revenue. Well, I can make money shrink like that too. That's not a magic trick.
Well, there was a company, I forget what it was, but essentially what they were doing is they were selling, I'm going to call them bricks. It was something. It was a widget They were selling bricks and essentially wrapping it with $100 bill. They were selling it for $98.
Yeah.
That's essentially what they were doing. They were losing $2 on purpose every time, but they were talking about top line, and the market bought it for a while.
They always do though, right? They always do. They're just like, well, it could be the next thing.
It's all about eyeballs.
Yeah. Oh my word. Yeah.
Do you remember? Yep. Oh my God.
Yep. I remember going, and I'm sure you did it too. Like I remember selling against what I would call vaporware.
Oh yeah. Oh,
I hate that. Right. And they're just like, no, that's in their next release. I was like, yeah, sure it is.
Yeah. Oh, yeah. I remember. Yeah. I remember selling against, white papers, right? Trying to sell against white papers. Well, really? I'm selling against they can't even show you product. I'm selling against a white paper. Yeah, really? Exactly. That's what we're talking about today. I can turn on my login screen and be more real than that white paper.
We actually put together a mock white paper, and it was completely mock. Like it was, I wish I could find it, but we did this fake mock-up white paper. And a white paper in the tech biz is basically like, here's all our product does, and here's why it does it the way that it does it, right?
Well, it's the vision, right?
But it's the future.
Like it could do,
right.
Yeah.
This is what we expect it will do when we build it someday when we actually deliver it. And
by the way, we haven't hired anybody yet to build it yet.
Yeah. And PS, we don't have developer 2 yet. We have the founder, but we don't have developer 2 yet.
We got nobody writing code.
Yeah, exactly. Yeah. We don't actually have any. Oh, no. We don't actually have any code. So we don't even need to escrow the code. Yeah. We don't even have any code. But like we built this mock white paper, and we would literally hand it to customers. They're like, and literally customers would say, that actually sounds really, really promising. And I was like, guys, that's what every other company is showing to you. We're here to show you what the product does today. Yeah. Now, presently fixing your problem today. Yeah. And that's where everything's going icky baluki. Like just everyone's going crazy.
Icky baluki. There we go. I like that.
Yeah.
Icky baluki.
Like, yeah. I mean, you just look at this stuff and you're like, this is crazy. And again, like we were talking about, those valuations, they exist for a reason. That's how experts, just like Mike and I look at our markets and look at affordability. Mm-hmm. That's how experts in the stock market often look at, okay, is this an expensive stock based on the multiple?
Yeah.
Because profit matters.
Well, it eventually matters. It doesn't matter all the time.
That's true.
Right. We are in a period today where I would argue that profit doesn't really matter.
Right now you're right.
But it will change. And the beauty about a market is it can be irrational a lot longer than you want. Right.
Well, that's what gets people broke, right?
Exactly. As it goes on farther and it brings on more people, and it's the last in, first out. I mean, oh my God, it's going to be bad. I don't know when it's going to be bad, but it's going to be bad.
Listen to a Tesla short.
Yeah, they've lost $1 billion here the last year or so.
Holy Toledo. And you know what the thing is? Their analysis, it's not wrong.
Yeah.
A lot of it's not wrong. A lot of it's kind of right. And you can kind of understand where they get there. And then they're just like, but I'm right. And you're like, the market's kind of kicking you in the teeth and proving that you're wrong.
Yeah. You might be right, but your timing sucks.
Yeah, exactly.
Yeah.
Exactly.
Well, it's just like Kathy Wood's thing, right? Kathy Wood can put on any Monte Carlo scenario she wants. And actually, I was going to do a video on this, right? So let me find a piece. Screw it.
No, find a piece of paper.
I'm going to do it, right? So here's the deal, right? So what is Tesla today? I think I saw this morning is like 610.
Yeah, something like that. Yeah.
And she's calling for it to be like 3,000.
Like 3,000?
Yeah.
Yep.
Okay.
Yep.
So this is what every, new investor thinks, right? Oh, it's going to go from 600 straight line to 3,000. You all idiots are buying that. Here's the problem, right? So here's 600. It's going to go up and it's going to go down. It's going to go down. It's going to go up. So Kathy Wood could technically be right.
Yes.
All your asses are going to get washed out here because you can't hold. She's an ETF. She has diamond hands. She can hold forever and she will be right.
That's right.
You all are going to get washed out here because you're on margin or whatnot. So if you're in cash and you own them free and clear, 5 years from now, Tesla is going to be a monster company. And yes, they could be the biggest company ever. I have no doubt.
Agreed.
Fine.
Agreed.
It's not a straight line. It doesn't go from 600 to 3,000. Are you prepared to suffer significant losses? And if you're on margin, you're not.
Right. And at a 70 to 90 multiple, aren't you kind of already paying for that?
Well, I mean, just think about all the things that could go wrong, right?
Right.
Chip shortage. Well, how many did you have to shut down for 7 or 8 days? I'm guessing that's going to impact car deliveries. What happens to commodities? I don't know what batteries are made of, but I'm guessing they're made out of stuff. And what happens if there's too many other car manufacturers that need stuff? Well, you can have a supply demand problem.
Yeah. This just in, Mike, I checked. You're right. They have stuff in them.
Nice. And then, oh, by the way, let's not forget the Elon Musk risk, right? Elon Musk is the Pied Piper, and he's rich as fuck. And if he wants, he could just go focus on Mars and not worry about, I'm not saying he's going to do that, but there is some Elon Musk risk. He is so smart. He can get so bored. He could do something else if he wanted to. And he may sometime in the future. How much of Tesla's valuation is because Musk is the CEO? Not zero.
Oh, yeah, no, not zero at all. I mean, I think it's got to be a fairly hefty number, right? I mean, the guy, right? He's the dude. And how many times in the last 6 months has he said his stock is at a completely irrational price?
Yeah. Well,
like, how much more could you love the guy? And I'm not invested at all in Tesla.
No, I wouldn't touch
nothing.
I wouldn't.
No
touch
way.
I wouldn't touch Tesla with your money. But again, I mean, Elon Musk could be, I mean, the SEC, he's a publicly traded company.
Yeah.
The SEC could come in and kick him out.
Yes.
Right. Because it's a public company. Sure. And oh, by the way, just the other day, he got in trouble again because he said Tesla could be bigger than Apple and sometime soon. And of course, that tweet got deleted, but lots of people took pictures. SEC does not like that stuff. Think about his taking Tesla private at 427 or 450, whatever that number was. Folks, I mean, it's got to be some Elon risk in this. And then again, what happens if technology changes? This is the thing that has crushed past high flyers. Is yes, they were legendary. They figured it out. They had they had patents. They had a big old moat around this solution. They print money. And then some other smart son of a gun comes in and goes, what if you did it different?
Yeah. There's a ton of competition, right? There's a ton, and there might be 10 years behind, but there's also much better technology now. So their ramp, not having to be the bleeding edge, their ramp is a whole lot better and easier, you know, and then, do what China does with pretty much everything else.
Fast copy.
Knock off the best product out there.
Yeah. And then the other arrogant stuff is people just assume growth rates will go forever.
Yeah.
You need to look up the law of large numbers.
Yeah.
Tesla won't double every year forever. It's mathematically impossible.
It can't. It physically can't. The math isn't there.
Yeah. But some people, Monte Carlo scenarios, they don't care about the real world. Yeah.
This is, and Mike, that's why I'm not a stock guy. I have a very limited holdings. I have very limited stuff deployed in the market.
I got zero. Let's be clear.
Yeah. I am very limited, like very, very small.
Yeah.
And that's it for me. Like that, this is an area that I feel extremely unsafe, no matter how many guys teach me how to read a chart, no matter how smart they are. I mean, especially for a lot of the mom and pops that we talk to, right? Or the college kids that we talk to, you're in a 9-to-5 job, or you just have your cell phone available. And if like stuff starts to go sideways, where something gets announced and goes, oh, you know what? 7 XYZ cars blew up.
Yeah.
And they're not sure why. And the stock tanks 200, but that's now 100 below what your cost basis was.
Yeah.
Like that's a scary thing. Like if you're in front of it all day long, like, yeah, okay. You can probably get ahead doing it. But if you're not, man, there's a reason why 90% or 90% plus of day traders lose money. That's why.
Yeah. Yeah. And again, we talk about Tesla a bunch here, but there are so many companies valued on revenue today. And that won't last forever. Again, I remember that company that literally was shipping a widget, wrapping it in $100 and selling it for $98. That works for a while, not forever. So pretty crazy time.
Totally agree with you. And it just, all of this flows, again, I'm not really a market guy, but all of this stuff, I watch it because it flows into housing.
That's exactly where we're going to close this. Because what happens to real estate? And again, remember what happened last time, right? Stock market falls off a cliff. People feel less wealthy. So they save and they stop spending. So consumer sentiment goes negative, right? They get scared. Then they stop shopping. Then their savings go up. But then the Fed comes in. Don't bet against the Fed. The Fed tries to pop up the market, but mom and pop are burned. Mom and pop don't come back for years. I didn't go back for a decade after getting torched. So what did I do? Rates went down, moved to real estate, right? That's right. It's just the setup again. It just feels so similar to what we did last time. And I'm nervous for folks that are feeling really rich today. because they've been doing gamification on Robinhood or some other app.
Oh yeah. Oh
and
yeah.
They're going to get caught, I think.
Yeah. Yeah. Please be careful. Please be careful. I mean, it's your nest egg, and it's the money that you work so hard for. And by the way, PS, I love the video that you did on the $200,000 poor people.
Oh yeah, that was good. Going broke on 200K.
Yeah, yeah. My son's 3, and I was showing him. I was like, "See, this is what a balance sheet shouldn't look like. You can cross these 6 line items off right here." And it was like, but this is the thing, is we care so much about people and wanting to give them an opportunity for a future. And hey, we're not saying do what we say, we're saying do what we've done.
Exactly.
And it's just a huge opportunity. So yeah, I just, please be careful. Make sure you're doing your homework and put yourself in the best position, because you know what? It's a whole lot easier to get behind saving every dime that you have to keep that, roof above your head, than it is having to rely on, the market not going up or your landlord not selling. I mean, I encourage people as a landlord, put yourself here. It's a nice place. Be here for 2 or 3 years, properly budget, and then buy your house. Absolutely. That's what I'm most proud of.
And the last thing I want to close with is do yourself a favor. I made this mistake. And again, I share it as my mistake, is I would tell people I had all this money, right? Hey, I have 197 grand. I didn't have squat because I didn't sell. Just because your trading account says some number, until you sell, you don't have it. You don't have the profit. Never forget, you can take your money back, right? If you put 10K in and now it's worth 20, get your 10K back. So you're at least whole. And then if you want to let the other 10K run, go nuts. You're whole still. So just remember, be careful. It just feels so similar to last time. And I hope I'm wrong. Let me be clear. I hope I'm wrong. I hope the market goes to the moon. It doesn't affect me. The market goes to the moon. The market goes to zero. It doesn't affect me one iota. So I hope it goes up, but it just doesn't feel like it.
Yeah. I mean, there's that time, right? Especially for people in their late 50s or early 60s now, I'd be nervous. Where are things 5 years from now? Where are things, like people considering retirement, and they might feel pretty good that they're at $1.7 million now, or $1.2 million, or 800K or 600K. What happens if the market halves again? What happens if those rates go up to 8? What happens if inflation, all these what ifs? Yes. But that's why diversification is key. And again, you really can't go wrong owning the roof over your head.
Absolutely. Remember when people were joking about having 201Ks instead of 401Ks? Yeah. If you're sitting at 65 or 60 and thinking about retiring, and suddenly you have a 201K.
Yeah.
Ouch.
Yeah.
So, yeah.
Yeah. Cause that's the thing, is Wall Street can wait you out. They've got more reserve than you.
Yeah, exactly. The market can be a lot irrational, a lot longer than you and I can be liquid.
True story.
Very cool. All right, buddy. Thanks again. It's always fun.
Awesome. Thanks, Mike. Appreciate you.